Neeraj and Menka, you all might call it clockwork, but trust me, when I first heard that the numbers were going to be reported on a Saturday and there was not going to be any earnings pressure.
You were worried. I know. So were all of us. We were wondering what surprise they were going to spring.
Right, but nothing of that sort has happened. So net profit, just a quick review of how the numbers were. The net profit growth came in at 20.3%. So that's the fourth consecutive order that the bank has managed to grow at 20+% as far as the net profit growth number is concerned. That apart, even the operational performance was good, 21% growth, largely led by two factors. One is the strong fee income growth of 32%, given that Q4 is generally a seasonally strong quarter for the bank, and slower operating expense growth on account of those digital initiatives. In fact, the cost to income ratio of about 40.6% was at a multi-quarter low, so that also aided operating profit growth. That apart, when it comes to disclosures, the bank did say that they have not used RBI's dispensation to spread MTM losses and provisions on bonds over a 4-quarter period like RBI had allowed. So they've not used that, and these are the profit numbers. Despite that, the marginal, if any, disappointment did come from loan growth, which came in at 18.7%. That is a 5-quarter low. That was mainly on account of the wholesale book dragging. It came in at just a single-digit growth number of 9.4% during the quarter. On the other hand, retail continued to do well, 27% growth, largely led by all your unsecured lending segments like personal loans and credit cards. When it comes to asset quality, again, the headline NPA number remains steady, 1.30% on a sequential basis. And the good part is that the provision coverage ratio was bumped up by about 350 basis points on a sequential basis to 70%. So no surprises. Asset quality contained despite that RBI circular.
So that's a quick snapshot of the numbers itself. There was an analyst conference call. Any key takeaways from that? And of course, what the brokerages had to say about these earnings.
Right. So the bank did say that they will be able to retain or maintain their net interest margin within that 4.1 to 4.3% band. This is the kind of band for NIMs that we've seen for many quarters. It came in at 4.3% during this quarter because they took a MCLR hike of 10 to 15 basis points mid-quarter sometime in February. But NIMs should be maintained in that range is what they've said. What they also said that while the momentum on wholesale loans continues, they would continue to remain cautious on this segment, especially given the current credit environment. So keep a lookout for how the growth in that segment pans out. They did acknowledge higher competitive intensity in retail products, and that's why they also said that the yields on advances in these segments have been under pressure. So that's another thing to watch out for. On asset quality, SMA1, SMA2 loan book have been stable over 3-4 quarters. The only stress area that they mentioned that continues to remain as far as what they're looking out for is going to be the agri segment, where they have made additional provisions. So no incremental stress that they pointed out, but this is one segment where they did say that the stress continues. And lastly, with respect to its 24,000 crore fundraising program that was approved, they said there are no immediate fundraising plans as far as its subsidiaries are concerned. So overall, brokerages have given a thumbs up to HDFC Bank earnings. First, you have CLSA, which has maintained a buy and hiked the target price marginally to 2470 crores. They did say that they're going to be watching out for the impact of slower branch additions on how it will impact retail growth in the future. And they've also said that they will continue to watch out for higher growth in unsecured loans, something that analysts have been pointing out for a very long time. But nevertheless, they do expect earnings CAGR over FY 18 to 21 to continue at about 21%. We also have Motilal Oswal, which is retained a buy, target price of 2400. They believe that the capital raise will help sustain the growth momentum for the bank, and they've also said that the strong fundamentals, lower stress, all of this will help HDFC Bank to continue to gain market share that it has been seeing. And ROEs, they say, will be the best amongst private sector banks at 17%. That is also on a diluted capital base. And lastly, Prabhudas Lilladher, again retain a buy, target price hike of about 5% to 2251 crores. They see strong loan growth trajectory continuing. And when it comes to the earnings CAGR, they expect a 20-21% growth. So that's a thumbs up from brokerages as well.
Yeah, well, not surprised at all, right? Also the largest asset base. You know, so many times we hear from people, like Swanand Kelkar of Morgan Stanley, for example, they don't speak about stocks, but they say that you want a bank in your portfolio wherein quarter after quarter, when the result comes out, you can yawn, shut your eyes and say, okay, fine, yet another quarter gone by. In 12 months' time, even if the price has not gone up, the book will go up and eventually the market will price in that book as well. So there aren't just enough sellers in HDFC Bank. Nobody comes out and sells it in big quantities, and therefore, even if it goes through a time correction, typically price corrections don't last in this one. And yet another quarter which reaffirms that quality.
And probably it will continue to remain the favorite of investors and funds like we've been seeing all this while.
Yeah, I think it also continues to be what, the largest asset base, right?
Yeah, in fact, so I Arjun put out, and I think Arjun and Shraddha put out this thing. Yeah, so there's a very nice graphic that we have which shows the asset base versus ICICI Bank and HDFC Bank over the last 4 or 5 years, right? This is the one, right, Shraddha? Yeah, so March 14, HDFC Bank was lower, substantially lower, if you can use that term.
5 lakh crores versus 6 lakh crores.
Yeah, and then look at what's happened over the past few years. It's gained substantially, and we don't know what will happen in March 20 getting the ICICI Bank.
Yeah, but they've clearly overtaken the market cap of ICICI Bank, and that is what we pointed out last week itself.